Hello and welcome to Market in a Minute, May the 27th, 2025. Another very mixed day in Asia Pacific as markets continue to struggle to digest the new normal of tariffs and counter tariffs, especially with so many mixed signals coming out of the White House. Another mixed day for the KSE100 index too, and another one of those instances when the index gives a false perception, giving a positive end number when actually the market ended in the negative. What that means and how it happens, let's understand at the chart. So this is what we mean. The index closed at 111.78 plus. However, the candle is red. What this means becomes more easily understandable in the hourly chart. For example, this is the first candle of May 27th, opened over here, ended over here, and the market was down about 200 points. And that still gave an eventual number of 111 points plus. This shows a small gap up at the open, which was more or less filled by the end of the day. But what this tells us is that the market continues to be listless, without any energy. And not much actually has changed over the last few days. The market is still on a retreat from an attempt to break or at least chase this high, the April 4th high. And while coming down, we were very closely focused on the RSI chart. The reasoning being that the RSI would have to break through this level of 60 for there to be enough momentum in the market to make a new high in the price action over here, which it didn't. So RSI is also turning, and that turn is now complete, which means that the market just simply did not have enough momentum at this point. Also notice that the volume in the last 2 days has been pretty high. Yesterday's volume was the highest in 10 days, and today's volume is the highest since February 20th, around over here. And again, despite the eventual plus count, this happened on a down day for the daily price action of the market, which is also a very telling sign. However, there is a confluence of support not very far from where we are right now. As we mentioned yesterday, this large gap from May 9th, which is also, according to Japanese candle chart principles, also acts as support and resistance. Then there are these two very important moving averages, the 50 and the 100-day exponential moving averages, all in the same zone, giving a level of the impression of a strong support over here. So, like we've mentioned on a couple of occasions, we have to notice 3 points. Number one, the price might be retreating to one of these moving averages or at some point in this window. The RSI might be retreating to the 40 level, and at that time, we will be near the announcement of the budget. So far, headlines like these, IMF disagrees with Pakistan over key targets, will cause anxiety and trauma in the market. But the closer we get to the budget announcement, the clearer the picture will become, and the better we'll be able to tell which way the index might be able to move. But for now, if we had to give a verdict, we'd keep in mind two things. Number one, once again, the index is retreating from an unsuccessful attempt to breach the record high on April the 4th. Number two, momentum indicator, RSI in this case, failed at the crucial level of 60. So, for those eager bulls who are really looking to buy, do that by all means, but only buy the dip if the upturn in the index is backed by a bounce in the RSI from the 40 level, like we've been saying for a couple of days. So now, from the 60, our attention turns more and more towards this 40 level as the price action takes us there. Volatility, again, once again, though reduced one more time week on week, is still near 2,300 points, which is still pretty high by KSE standards. So all in all, the market remains listless yet volatile, directionless yet with enough support and resistance around it to keep the argument alive, with giving both sides ammunition, both bulls and bears, about the eventual direction of the breakout. So stay tuned.